Thanks for being here, everyone. We're just gonna give it another minute or two. Actually, less than a minute. We'll give it another 30 seconds. We just hit the starting time. Usually there's kind of a last bunch of people that jump in. But yeah, thanks for being here. Hey, Max. I don't know if it's Ivan or Yvonne, but welcome. So today I'm going to start by going over just in about a 5-minute summary the things we covered last week. That if you missed it, actually I say last week, but I really mean last recording on Monday. And so if you missed it, you can always just go back and rewatch the whole thing. It's kind of meant as a refresher for people that are relatively new to TradeMachine. Today's going to be kind of part 2, where we're going to go into portfolio back tests and custom strategies. I'm going to do a kind of a quick refresher for people that either missed the last one or who just to kind of keep everything top of mind for people that are new to the platform and have only, just started logging in and figuring it all out. New. All right, well, welcome. Glad you could be here. Feel free to put messages in chat. Amanda's here. She might answer some of the questions as we go, and Max is here as well. And so feel free to, type questions as you go, and then I'll have kind of a dedicated Q&A at the end. And as always, I am going to start with the disclaimers. This is not a solicitation to buy or sell any security ever. This is not advice. You should read the characteristics and risks of standardized options. The results here are provided for general information purposes as a convenience to the viewers. The materials are not a substitute for obtaining professional advice from a qualified person, firm, or corporation. Trading futures and options involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Past results are not necessarily indicative of future results. The risk of loss in trading can be substantial. Carefully consider the inherent risks of such investment in light of your financial condition. So I'm Jason Hitchings. I'm the CTO at Capital Market Labs. I'm the person who wrote the actual code for TradeMachine. I've also been in the options, space for, since kind of mid 2000s. Met Ophir back at a company called Livewall that got bought by SIBO. So I've been working in options analytics and options, tools for a long time. As mentioned, we're going to do a quick refresh on what we covered last week, just in about 5 minutes. Then we're going to look at save strategies, portfolio back tests, adding alerts, and we're going to do some custom strategies in there, and then we'll answer any questions. Okay, so last week we watched this video on what is backtesting. If you haven't seen it, just when you log into TradeMachine, it's on our homepage, but it has a nice sort of analogy for what backtesting is and what the benefits of it are. So it's a good way to have a mental framework for what the sort of engine behind TradeMachine is. But we're running hundreds of thousands of market simulations, and we're finding strategies that tend to outperform the market in a variety of scenarios. And then we have various ways within the tool to alert you when the right time to enter would be if you want to do that strategy. We also talked about a couple tenets of being a successful trader. Real big philosophy around here is that you should write down the trades that you enter, and that you should know when you're gonna, when you entered it and when you're gonna exit it. This kind of helps calm nerves if the market starts turning against you, just to have a plan and stick to it. It takes a while. If you have a strategy that tends to return, that wins 60% of the time, and, let's just imagine that it's like flipping a coin where every time it lands on heads, you double your money, and every time it lands on tails, you lose. If you could flip that coin a million times, then you're going to have an, exponentially growing amount of money. But if you just flipped it twice, the chances are you're going to win one and lose one. And so it really takes, a handful of trades, especially spread out in different market conditions, ideally with a few different strategies, to start having a long-term trend. And when you're writing those things down, you can start to see like, hey, this has been working well for me, and I'm going to start, investing more time into that strategy. So you can, when you have a little bit of edge, you can really see, that edge start to play out over time. This is just a matter of opinion for me, but I'm a big believer in kind of starting small, testing which strategies are working. Once you've started building up some wins and some profits, then starting to reinvest those profits to take slightly larger bets is a good way to protect your portfolio. Again, we don't give trading advice or recommendations, but that's my personal opinion. So this is an example of writing things down. It's just open date, close date, when you entered, why you entered, the price of your trades, if it won or lost, and then just sort of tracking that over time. I tend to keep a share link to the backtest as well. We started by looking at the Today tab. Has a bunch of different strategies, and anything that has a blue Today on it means that it's active, that the conditions were active when that happened. But that could change over the course of the day, so you can keep an eye on that. Platinum members, annual members have this liquidity button at the top, so you can filter and only show strategies where the markets are tight, and you can kind of, the higher you go, the tighter they tend to be. That kind of eliminates some of the noise. Stocks that are trading at $2 that are, still they're 50 cents wide on a $2 stock isn't very helpful. So we looked at bullish bursts, we picked one, and just a reminder, there's a little question mark here. You can do a deep dive on any one of the strategies. There's a show options button on the backtest tab. So if you click any one of these pieces of text, it's going to open the backtester. It's going to give you some helpful information. On that backtest tab, there's a show options chain. You can filter by days to expiration, and then you can kind of go down, you can look up your delta, look up your strikes, and then you kind of know just the information you need to the trade. So this is on a Thinkorswim web version, kind of same concept. There's a delta, and you find the right strike, and then you can place your trade. Annual members have a cool feature where you can click show options and it kind of does that work for you, simplifies things. This can be especially helpful when you have multi-leg strategies or if there's an earnings event. Sometimes one part of the spread needs to expire before earnings and the other needs to expire after. So this can kind of take some of the, some of the grunt work out of it. And then last thing I'll note before kind of jumping into new material is just a few things on the backtest tab to pay attention to. There's a helpful piece of information at the top here that says when the next earnings event's going to be. If it says unverified, then be very cautious with it. Then our vendor is sort of guessing based off of previous data. It tends not to be super far off, but it could be. Things that are verified are concrete, and they actually put a little money back guarantee behind each one. So they're extremely rare to be off if it's a verified earnings date. When you load a backtest, oftentimes the end date, anytime you save a strategy or have a share link, that all of the information from the backtest is saved, including the end date. So sometimes you might see something from a few weeks ago or even older. So you just want to update the end date. You can click one of the buttons for backtest lengths. One more little thing is in the tickers in the top, if there's a comma, then it will just run the middle delta. And if you click the little settings gear at the top of your backtest tab, it shows all the deltas. And if this use my own deltas is checked, it's going to use these to run the strategies. If you run a single ticker, it will run all of these deltas, and it'll use this for the second leg of the spread. But if you have a comma or if you have multiple tickers separated by commas, it will just run the middle one for each. And if the settings get kind of funky and you have like a, maybe you're testing a straddle with a 40, delta on both, or the strangle for 40 delta or straddle with 50 delta. If you then switch to a call spread, it's not going to like it because it can't buy and sell the same option. So if it's acting a little funky, check out the deltas, make sure that's all making sense. Okay, great. So now we get to dive into the new stuff on the backtest tab here, and I'll kind of follow along in TradeMachine. So I'll just go to the backtest tab. When you first log in, you see the Today tab here. But if you click the backtest tab, it takes you to a backtest. And if you haven't clicked a share link, then it, generally is going to start off pretty fresh. So I'm clicking the Saved Strategies button, and then listed here we have all of these are pretty much the strategies that you see on the Today tab, all these that start with CML in the front. Everyone has access to these. And then you can save your own. If you click, anytime you have a backtest, if you click Save, then it will add it down to the bottom here. Just for example purposes, I'm starting with one of the simpler ones, this bullish burst. It's a single leg, and I'm going to load it. When you load that strategy, as I mentioned, so it's whenever we added all these save strategies, they were a single save backtest at that time. And so you can see that the end date here is October of 2023. And so, this is how that strategy performed at that time. But if you want to know how this strategy has done as a whole, if you're trying to decide, hey, are bullish bursts like a strategy I want to employ, then first, after loading it, you can update the date. But after that, you're really going to want to look at more than a single stock. And you can enter up to 5 stocks here. You can enter a few more stocks, but that still doesn't tell you a lot of information. Now you just know how well it worked or didn't work on 3 stocks. So if you click this portfolios, then what it's going to do is let you test against a basket of stocks. And so now you can really start to refine your strategies and not just tweak it for an individual stock, but really start to look at strategies, across, a wider basket. And that's going to give you a much better signal on if this is a strategy that's going to, really have edge in the market and not just happen to work well in a single stock. So I'm going to click portfolios. When I do that, the first one that's loaded is this NASDAQ QQQs. Everyone has access to all of these top ones that start underscore underscore. So it's doing the NASDAQ 100. And because I loaded this saved strategy, it's keeping all of the settings from that bullish burst. So this is the technical setup of the bullish burst. There's a whole video on it. I won't go into a lot of detail, but it's trying to catch things where the stock is, prepared to take a sort of short-term move in a bullish direction. So now it's just rerunning that. So the question I'm trying to answer right now is, do I want to use bullish bursts in my own trading? And so you can see it's going down here and it's, doing all these back tests. If this looks faster than what you're used to on your back tester, it's probably because I'm a platinum member, and platinum members have access to slightly faster, substantially faster back tests, just from how we, license servers and all that kind of stuff. So it's one of the perks of being annual. You can switch, of course, I always make the plug, but you can switch to annual anytime. And it does help us as we can kind of, just lets us kind of normalize and license servers and all that kind of stuff in a way that works well for us. Okay, so in the last year, this strategy, which is buying a long call that's a little bit out of the money, it's looking at something approximately 14 days in the future. It's looking for the expiration closest to that. It'll just choose the expiration closest to that. If it doesn't have weeklies, then it's just going to choose whatever is expiring near there. And this strategy across a whole, across that NASDAQ 100 in the last year has a 50.3% win rate, and the average trade return is 14.5%. That's respectable. That's pretty good. The market's been in a good place in the last year, so it's not real surprising that has had positive results, but it has. You might ask, like, well, is 50.3%, is that really a great win rate? And it's a very good question. In theory, you could be buying very out of the money options that are very unlikely to win, but when they do, they win big. So you might be buying 10 delta, 5 delta options that only going to win 1 in 10 or 1 in 20 times, but when they do, they might make up for all the losses of the previous trades. So one delta is kind of telling you how in or out of the money something is. Something that's 40 delta, one way to look at it is that there's a 40% chance that the stock will end up at that strike price or above. And in order for this to make money, you need to not only reach the strike price, but you need to also reach the strike price plus the options premium. If the option costs $2 to enter, then you're going to have to reach the strike price plus $2 to break even, and you're going to have to make another penny in order to have a win. So 50.3% in this scenario actually is pretty respectable, because you'd only expect, if you're just buying the option with no prior knowledge, you'd expect to win about 40% of the time. Perhaps more importantly, the average trade return is 14.5%. So that looks like a decent start. But the question is, can we do better than that? And so instead of just trading a call, we could pick a different strategy here. And we could pick a call spread, so that we'll buy a 40 delta call, but we'll also sell a 20 delta call. And I know it's 20 delta from these custom deltas that I have here in the same expiration. And so I'm just letting that run through, and I'll kind of let that, do its thing. Getting down to the results here, and then just to save us 30 seconds of time, I could kind of jump to the results. And then we see that now the results, instead of being about a 50% winner, or about a 55% of the time does it win. And the average trade return went down slightly with the current settings we have. We also have a stop and limit set in there. And so now it's kind of a matter of taste. It's like, well, we're winning a higher percentage, which is nice. The average trade return went down. So that's, that's not bad. But what if we decide to hold it a little longer? The default settings on this bullish burst are that if you gain 40% to exit, and if you lose 60% of the initial amount you put in, then you would exit. Spreads are a little different. The risks are a little different. So what if we just play with this, and I just kind of chose 80, as a test point. And so in this strategy here, so I think, yeah, you can see this finished, same results there. So this gains and losses, when I scroll down on the left, you see it down here. It's set at 40 and 60. I can set that for 80 and let it rerun. I can save us all a few seconds here. And here's what we see. We see that the win rate went down from 55 to 46, and the average trade return went up. And that actually makes sense if you think about it, because if you're setting a limit when you're starting to look at this thing, and this might be obvious, to a lot of people, but it's interesting to think about it in the context of applying a strategy over a long period of time. When you set a limit, if you set a limit to exit the strategy as soon as you return, if you entered for $2 and you set a limit to exit the trade when you hit $2.05 or $2 and a penny if it's penny traded, then a decent amount of the time it's gonna that as the value of that option fluctuates, it's going to hit that limit. And technically you can lock that in as a win. So if you set a very tight limit, you're going to have a pretty high percentage that at some point hit that limit. But if it's only 5% above price that you entered, then when you win, you're going to win roughly 5%. Now, when you lose, if you don't set a similar stop, potentially you could lose the full amount. So you might win a high percentage and your win rate is going to go up, but your average trade return, could get hurt because maybe you're going to win 80%, but when you win that 80%, you're winning, 5%. And a lot of the time you're losing 100%. And so that might not be, even though you have a high winning percentage, it's not a great trade to set it up like that. So when we let this strategy kind of let it run a little longer, and we said instead of exiting at 40%, exit at 80%, we saw that our winning percent dropped, but our average trade percent went up quite a bit. And when we're looking at portfolio backtesting, it's really these two numbers that we're looking at the most. We're placing the same number of contracts in each one of these stocks. So the total return is a helpful piece of information, but it's going to get a little bit skewed by the stocks that just have a higher stock price. So, a stock that's trading at, $500 or $1,000, 5 contracts there is going to be a large number. And so the results can look a little funny based off of the kind of big components of that basket having an outsized weight. Whereas the win rate and this average trade percent, this is normalized across all the stocks. And so these are helpful numbers to look at when portfolio backtesting. Total return is absolutely fine to look at, but it's not balanced. So this did what you'd expect it to do. When we increased the limit, we saw the win rate drop some because we didn't exit our wins as early. We didn't lock in the wins, but our average trade percent went up as a whole, that's a good sign because this actually takes into account the wins and the losses in a sense, your average trade return. So, we can kind of see how that played out. Okay, so let's do the same thing, but now instead of just looking at 1 year, let's look at 2 years because the last year's been good, but if you look about the last 2 years, that's been a much more mixed market, kind of a bad year and a good year. As that plays out, we see that in the good year it did well, and then when you combine both, okay, you're slightly profitable. You still came out ahead in terms of the average trade percent. It went down quite a bit, but it's still, from my perspective, now that we're in a market that seems to be going the direction you'd hope it, hopefully we're kind of entering into a more bullish period in the market. The fact that it at least broke even over those 2 time frames feels reasonable. So then the question becomes, well, can we do better still? So now instead of just buying a naked 40 delta call, we also sold a 20 delta call. So we had a little, bull call spread, vertical call spread, and we could kind of see the way that changed the trade. Is there anything else we could do? So now let's look at if we want to get a little more fancy. So these are the kind of built-in strategies within TradeMachine, but we also have the ability to create our own custom strategies. So when I click custom, there'll be a list here I could choose from of things I've done in the past. But you can also add a new one. So now let's think to ourselves, instead of having the option expire in the same month, what if the option I was shorting expired sooner and the option that I was holding expired a little later on? It would offset some of the, cost of owning the option, the time cost of owning the option. And we could just kind of test that scenario and see how it would play out. So if we wanted to try that, then we could do something like so this is the long 50 delta. So let's try a long 40 delta. Let's call it I call diag. And I'm going to go ahead and do it as 5 contracts because that's what a lot of these use is 5 contracts. But now I'm going to short, but instead of shorting the 20 delta and the same expiration, I'm going to look at a nearer term expiration. So something like 2 weeks out. And because it's near term, I'm not going to use a 20 delta. I'm going to use a 30 delta in this example because as it's a little near term, there's not going to be quite as much time value built into it. So if I want to recoup a decent amount of time value, I'm going to use something a little tighter. what I'm hoping is that front month option, expires and that I have a chance for my slightly longer dated option to continue to make some money. So now I'm going to short that 30 delta call and add that. And I name my strategy and now I can save it. And I can kind of see how that strategy plays out. I did this a little earlier today. And so here's this, same strategy. And when I did this, so this is still in that 2-year time frame. So that incorporates that sort of, much choppier market that we had 2 years ago. And we can see this average trade return went all the way up to over 15%. And that was from 4%. So looking at these things side by side, this was the pure call spread. I think this was like a 14-day call spread. And this is the, this diagonal that's using like a 40 delta 30-day and a, 14-day 30 delta option. So over a 2-year time frame, the average trade return went from basically 5% to almost 16%, and the percent wins went up. So this was just a real clear winner in terms of this strategy over the last 2 years. So that to me is looking pretty attractive. Something like this, these diagonal call spreads, if you're new to options, that might feel like a lot to take on. It might feel a little confusing. And that's kind of the benefit of investing into your own understanding of options and your own understanding of TradeMachine over time, is that sometimes with slightly more complicated spreads that are a little more confusing initially, sometimes you can really get much better returns. And so while it's completely a great place to start to buy individual calls or do covered calls or things like that, starting to expand your knowledge and look at spreads and that kind of thing allows you to construct, positions that do well in a variety of different market conditions. Okay, so it looked good at the 2 years, but how does a 1 year look? When we do the 1 year, hey, this is solid. This is very good returns, 18%, 52% win rate. So the straight call spread looked like this. It had a 11% win rate. 11% average trade return, 55% win rate. Our win rate went down slightly, but our average trade return went up quite a bit. And so to me, just from where I'm sitting, I'm saying, hey, that's a pretty nice strategy. Okay, so great. So now you found a good strategy. Now what? Because there's all these technical conditions and, how are you going to really figure out for different stocks? It's like, okay, I have to wait until it's not an earnings event. And then for each stock, I need to know when the stock crosses up through the 10-day exponential moving average, the stock's above the 200-day moving average, that the 50-day moving average is above the stock price, so the stock is below the 50-day moving average, and the RSI is below 70, so it's not overbought. Well, it would be a full-time job if you had to do that on your own. But the good news is, it might rerun this backtest when I save it. I'm going to do smaller. Well, I'll just let it play out. Good news is once this thing finishes doing the backtest, what you'll see is this little checkbox that appears, and I have it on a slide as well. And right now there's no add alert button here, but when you complete the backtest, it will show up. I'll talk about that in just a second. So what I personally like to do is, because within the strategies, some worked better than others. Some might have had a positive return, but the win rate, maybe it only was on one trade. So yeah, this, DXCM, it won, but it was only a single trade. Like, do I consider that enough? Nothing wrong with adding that. But what I like to do is sort by the average trade percent, and then look at the number of wins and look for things that have more than one win. That's just my personal preference. So as this one kind of completes through, I'll just walk through it. When I save the technicals there, it reran the strategy. Okay, so see this little button here. So I like to sort by this average trade return, starting at the highest. And then I look for things with, more wins than losses and more than one trade. So I can just kind of go down here. So this one, even though it was net positive, it won 4 times and lost 5 times. So I'm going to skip it. These are 1 win, 1 win, but this is 2, 2, 2. If you click the actual ticker, it'll show you all the details. And you can kind of go through and pick, the trades that you like the best. And then you go up here and you click the add alert button, and it creates this little thing for you, and it creates a share link. And so you can also say, hey, this is like my custom diag, any other notes that you want to put. Now, when you click add alert, for each one of these individual stocks, it's going to constantly look to see if those technical conditions are met. It's also going to look to make sure that the earning conditions are valid. If you're doing an earnings trade, like pre-earnings or post-earnings, And it's going to notify you. If you put a phone number, it'll send you a text as well. And it will tell you the stock that these conditions were true in, and it will, send that to an email to your phone and keep you alerted in real time. So now when I add the alert, it adds those all. And the helpful share link, some people don't know what this is. It looks like a mess, and so they get rid of the share link. But the share link will actually recreate that backtest for you. And one thing I want to note is that the share link includes all of the tickers that you checked at that time. But you'll want to look inside of your alert, because the alert will say it was Google or Apple or, whatever the stock was, that was true. And so let's just imagine for a second that it was Microsoft. Now, when you pull up in Microsoft, you can see the backtest for that. And if it had triggered that day, chances are it would still be active, and it would tell you right here that it's active. And if had stock jumped over the whatever 200-day moving average and then dropped back down, then it would say not active, that it's no longer active. But you can kind of check that throughout the day as time goes on. That's how TradeMachine kind of takes a lot of that work of waiting for those signals and setups, and then just notifies you when the time is right. The way our backtester works is it places its trade toward the end of the day. So if you want to stick as close as you can to the TradeMachine approach, then you would kind of wait till the last 15 minutes or so of the day. That's also when the options tend to be the most liquid. And then you could place a trade that way.
Hey, Jason.
Yep.
I just wanted to jump in because I've had some users reach out to support, and there's kind of a workaround. It does take a little bit more work, but because you can see 5 backtest tiles at a time, if you save your alerts in groups of 5,
yep,
you can see all at the same time. So if you're somebody that doesn't want to change the ticker each time you go in, you can just save it in a group of 5. It's going to load all 5 backtest tiles, and it's just another way to see everything a little quicker, just depending on what your preference is.
Yeah. No, that's a great point. To Amanda's point, so because you can do 5 tickers where you actually see the whole tile and whether it's active or not, if you want to do these in groups of 5, it's a very good point. You could click 5 of these, click add alert, and then when you get this alert this way, when it pops up, you're actually going to see the whole result tile and not just the summary. Okay, sorry, I had the wrong link here. And so for each individual one, then you can see if a certain ticker is active. And when you pull up that link, you can kind of just do groups of 5. So you could do those 5 and then clear them out and then do the next 5. So yeah, that's a little workaround. And it's a good point. So that way it kind of saves you a step. So you could just kind of add in groups of 5, and that might keep it a little cleaner for you. So that's a good point.
Yeah. I've also had people say that doing it this way, they can save them in a kind of like their own little baskets of stocks that they want to compare readily. So then they can see if when Apple triggers, NVIDIA triggers at the same time, or vice versa. So you can kind of be strategic as to which alerts you put together.
Yeah, that makes a lot of sense. Yeah, there's a lot of tech stocks reporting earnings this week. I could definitely see the advantage of, grouping things together that way. So yeah, great point. That's I hadn't actually ever done that before. So that's a good one. Okay, great. So that was kind of got through the main stuff I wanted to present. I just wanted to make one note about these back tests. So another point of confusion is that sometimes people will do a back test and then they'll look at a ticker and it'll say, okay, they're looking at, I'll just do a single ticker right now, Microsoft, and they'll say well, it's not showing that it opened today. It opened back here, but it didn't show an open right now. So very likely the end date isn't updated, so you're just not seeing it at the very end. Another possibility is that the backtester opened a trade 7 days ago or some amount of time where the position is still open. And because this is simulating a market where it's imagining you're executing a strategy where you open a trade when it signals, but you don't open a trade again until it closes. So if you got a signal right here, so if I scroll down here, I can kind of, replicate it a little bit. If you got a trigger, let's just imagine that you're right here. The backtest said, well, this said it opened the trade 4 days ago, but it's not telling me to open a trade right now. That's because the backtest is bringing in the history of trading that strategy into the backtest. These alerts trigger basically as if the start date of the backtest was today. So you're just entering into a brand new backtest. So in a sense, you're starting at the very beginning. It's like starting the backtest here. But if the backtester already has a trade open, it's not going to reopen one. So you might not see a little green arrow here. But what you will see if everything's active is it'll say active as of this time. Did that make sense? And I'll just go to the Today tab and, any given one of these may or may not have been active still at the end of the day, but just to show you the green version, if this one happens not to be active. Okay, this one is active. So that's what it'll look like, whether or not the backtest actually shows a trade on the day. This little flag will tell you if it's active, and then for Platinum members, they get to click that little button and it'll kind of do the work and tell them, what the legs are in the strategy. And you can see that this is a diagonal and it's figured out the legs for you. So that kind of saves a little bit of work. Okay, great. So that's the main stuff I wanted to get through today. And now I'm happy to take any questions. Okay, so I've noticed some tickers which appear multiple times in the Pro scan have different next earnings dates. NW, yeah, so that can happen in the Pro scanner. Sometimes when the scan, like we run the scans about every maybe 2 weeks. We try to get all of the ones fresh. So if that scan happened to run before like an earnings date, and then we run it again at the next earnings date, it will save what it thinks is the next earnings date as of that time. So occasionally you will see that. We're actually, doing a little bit of refreshing of some servers to kind of keep those ones that were running before the last earnings date to get those earnings date refreshed. But yes, that is a little quirk in the scanner right now. Chad says, what's the best way to tell if the conditions for the alerts are still in play at the end of the day before placing a trade? Yeah, awesome question. And it's really this. And this is a relatively new feature, but it really saves a lot of headache. You just, if this says triggered, then it's active as of that moment. How do you delete a set of alerts? Great. So a couple ways. One, you can just delete this way. So I'm just going to delete ones that I know are sort of examples, not my actual real alerts. So you can just click like this. But if you want to delete more, and that will go pretty quick. Like if you want to filter by ticker, or, if you put a basket of alert conditions in, like for some bullish burst or something, then when you sort by condition, you'll see them all get grouped together. Or if you put notes, you can filter down on the notes and say, let's see if I have diag in my notes here. Okay, so I put these are the custom diagonals. So I filtered on notes. If I wanted to delete these, then I can just, quickly delete these in just like a minute or two. If you really want to go and just like start fresh, and let's say you set 500 alerts, there's this bulk update alerts, and there is this like I want to permanently delete everything. So that's also an option. This bulk update alerts also gives you the ability to like change your email address or phone number if you decided, hey, I'm getting a ton of alerts to my work email and I really want it to be in a different email. You can update the alert email there. Ernest says, when you change the deltas, as in your example, and save the backtest, is that change then reflected for that strategy in the future? If you change the delta, so let's just do a real simple example. So if I say AMD, and you said if you're doing a particular strategy, so I'll go back to the bullish burst. Let's say this is going at the 40 delta. If you in these settings change this to a 30 delta, right now it's only changed it for this. Now, if you go to a different tab and come back and you don't click a share link, it's still going to say 30 delta. But as soon as you click any link in the product, it's going to update all of the settings. It's going to update the number of contracts, the fees, all that kind of stuff. Every time you load a share link, it updates these settings. We're probably going to put a little reset button to reset to people's preferences. If you want to do your own, call it bullish burst, what you can do is click the save button and say, my bullish burst 30 delta. Now that strategy from that point on is going to load with the 30 delta, but it will not change any of these CML strategies that are built in here, and it won't even change the existing ones. If you want to change it, then you would just delete the old strategy and then add the new one. So this says bullish technicals. I could delete it, change the settings, and then save it again. So that would be the way that you'd update it. When you click the share link, anytime you click this little share button or you add an alert, it does it automatically. This link carries forward all of those settings. So anything that you changed gets carried forward in that share link. So you can see the 30 delta here, but also if you change it to 2 contracts, if you said, every time I trade a share, it's going to cost me $10 because that's the fees are set up in my brokerage. When you click this share link, and you can either click a copy here or just copy it off the top, the next time that you open that up, all of those settings are saved. So this is If we didn't do it this way, it'd be confusing because every single time you opened a strategy, it'd be changing. You're like, hey, I thought this made 150%, but this time it only made 110%. What happened? So we kind of had to make a choice. Are we going to overwrite all of your settings every single time with every share link, or are we going to let the strategy sort of change once you've tried to save them? And so we've made the decision to always update all the settings so you get exactly the same result. Also, so that when you click a link from the Today tab, when it loads, you see that backtest with that exact result. If we didn't update these settings, then the results would be different, and that also, so it's kind of a balancing act, and that's the way that we've implemented it. So if you do have a setup that you like, I just recommend that you save a backtest that way, and then you can load it with all those settings. Same with a custom strategy. You can create your own custom strategies. Okay, DJ says, in a strategy that is supposed to exit at 40%, why do some past trades show much higher returns? Yeah, excellent question. So our backtester, the way that we've implemented it, it places all of the trades at the last section of the market. And so it's a little bit like, sometimes if you put a limit order in, let's say you were trading an earnings event on, Microsoft today or Google, had a really great earnings day. Let's say that you bought a 30 delta option and then you said, I want to have a limit of 50%. It gapped today. So it's going to open, that stock's going to open up, 15% or something like that. It's a huge gap up. So even though you set a limit saying, I want to exit as soon as it gets 50%, tomorrow the market price of that option is going to be up like 500%. And so even though you set that limit, it's the first chance it has to sell it, it's going to sell it at market price with your limit set, but you're going to get a much bigger return than that. That's essentially what's happening with the backtester. We're always looking at the data at the end of the day. And so even if the stock kind of like moved up or down through those ranges, it's only going to hit the limit if that limit is true at the end of the day. And so sometimes it can be higher, or sometimes an option might have intraday caught that 50% limit, for example, but at the end of the day ended with only up 30%. And so the backtester won't exit that position. We've tried it both ways, and we've decided that it's more consistent for the product to do it this way. But it's a great question, and that's why that's happening. Darren asks, is TradeMachine linked to your broker for you to place a trade when an indicator signals, or do you just get a signal, then go to your broker and place a trade? Yep, we have not connected it to brokerages so far. We get the request a lot. It's a possibility that we'll do it in the future. Generally speaking, once people start sending order flow through brokerages, then they end up being financially incentivized to do it. They end up getting, kickbacks and percentages based off of trades placed. So far, we haven't gone down that route because we kind of like having this be a tool that is giving you the best possible information where we're not, we have no, it has no effect on us, whether you wait 3 weeks to place a trade or whether you place 3 in a day. So yeah, we've tried to make it really easy with the show options to quickly look it up in a brokerage. But yeah, we have not yet started sending order flow through into brokerages. We get asked a lot. It's possible we'll go in that direction, but so far we've kind of tried to keep arm's length on that one. But it's a great question. Okay, why do symbols in the today page that are active triggers show as not active when you click a symbol? Yeah, so today tab is checking things constantly intraday. So let's say that stock crosses up above a 200-day moving average. It's going to send that alert immediately. And you can actually set alerts in the Today tab. You can pick an email at the top and say, for the largest 500 symbols, I want to get all of the Today tab alerts. And for the NASDAQ 100, I want to get these Today tab alerts, for these strategies. You'll get an email in the middle of the day when that comes true. And, it's a matter of personal preference if you're going to place the trade in the middle of the day, if that works for your schedule, or if you're going to wait to the end of the day. We didn't want to only send the alert in the last 15 minutes because, some people are commuting or on a lunch break or with their kids or a million other things. So we send the alert as soon as it happens to give you a heads up. But if you want to stick as true to the TradeMachine as possible, then you'd probably check later in the day and see if it's still active before placing it. Oftentimes, both Ophir and I frequently place trades as long as it's active when I'm actually looking at the strategy. I frequently place trades in the middle of the day. No, we don't have any information one way or another if that's, gives you better or worse results. It's just we find it more practical. But for that reason, if stock bounces up above a certain moving average and then comes back down, it might trigger in the middle of the day. You get an alert in your email, and we wanted to show it here, when it's true. But when you click on it, then it may no longer be active. So That's the reason. Essentially, once it hits this Today tab, it stays on the Today tab. Um, you know, ultimately we may have a like a little green dot here that shows that it's still active or something like that. But yeah, it's a great question. Yeah, so Costco is an example. Yeah, I could click where do we get Costco? Well, that was 2 days ago. So yeah, one thing is if it triggered 2 days ago, this is kind of to show you a history of things that triggered. So this one actually didn't trigger today. So it's only the ones that are blue that triggered today. People had sort of asked to see some history for what things have triggered recently, so that's why it's showing a little bit of history. That's another filter that we may add at some point, is just to filter it down to things that traded today. So yeah, if it doesn't say today next to it, then it means it triggered a day or two ago. Cool. Well, we're right around that 45-minute mark, which is kind of the time frame we like to stick in. I'm happy to take one last question if anyone has any more. But if not, I really appreciate all of you being here. We do these at least once a week. If you go to the Learn tab, you can find all of the previous help sessions. So down here, there's these live help session archive. So you can see, the last couple sessions we did some on risk and a bunch of other things. There's also a lot of options education, about all kinds of different spreads and that kind of thing. And if you're looking to look more research on a particular strategy, a bullish burst or MACD or the, 1x, 3x2, Brooklyn Wing Butterfly, lots of great stuff there. So yeah, definitely check out the Learn tab and, come talk to us in community. Great place to get questions answered. We have Max, who's, a former options market maker with like 30 years trading experience to answer questions. So he's a really awesome resource. And just in general, it's a really friendly place to just go and share your trade ideas and ask some questions. And, I think you'll find everyone really welcoming. Okay, everybody. Thanks so much for being here. And we'll look forward to seeing you the next time. Have a great evening.